Welcome to an economic revision blast. This time we're going to take a look at debt relief, a key topic, certainly at the moment, in development economics. Yeah, there are signs that 2023 could be a really tough year for many low and middle income countries, emerging economies who are, in many cases, burdened with external debt. That's debt owed to overseas creditors. It could be banks, governments and other lenders. The World Bank forecast that in 2023, the poorest countries in the world will see their debt interest payments go up by over a third, 35%. £63 billion will be spent by just 75 countries on interest alone to cover the loans taken out over the last decade. The total stock of debt, external debt, is £9 trillion, double what it was 10 years ago, with China the largest single creditor, two-thirds of debt service payments due to China. And as the World Bank says there, almost two-thirds of the poorest countries are already at the high risk of debt distress or are in distress. Distress is problems in repaying just the interest. As interest rates go up globally and the world economy slows down, that can tip many into a debt crisis. The Guardian saying that time may be running out. The global debt crisis reaches critical point. A crunch a decade in the making seems to be coming to a head. And here's a good example for one specific country. In Zambia, a country with a lot of external debt, more than 100 economists and academics have urged international lenders to crisis-stricken Zambia to write off a significant slice of their loans during financial restructuring. That would be a form of debt relief. Take a look at this chart, which shows the total stock of overseas debt, external debt, owed by a selection of countries. All of these countries in 2021 have an external debt stock more than the size of their GNI, or basically GDP, national income. From Angola, 101%, all the way up to Mozambique, which has a stock of debt 4 times the annual value of the output of goods and services. That is huge. And this chart kind of reinforces it. This is the cost of servicing the debt. So this is the interest payments that you have to make on loans, expressed as a percentage of the total value each year of a country's exports and primary income from overseas investments. If you think about the balance of payments there, export revenues and primary incomes. Sri Lanka, 1/3 of the debt service, the interest they're paying on loans is 1/3 of their exports and primary income. Rwanda, 38%, Brazil, 45%, and Mozambique, if you go back and have that chart, they had 400% of GNI in their debt stock. Mozambique, this year, 2021, is spending 109% of the value of their exports and primary income just on servicing their debt. And that carries a very heavy opportunity cost. So what is debt relief? Well, debt relief is a form of aid, essentially, and it's a kind of key issue. It's a question about whether rich, advanced nations, high-income countries, creditors in rich countries should be willing and able to, including middle-income countries also like China, should be willing and able to offer some form of debt relief to poorer nations. Now, debt relief can come in a number of ways. Let me just quickly take you through them, if it's okay with you. The first one is forgiveness. So forgiveness is cancellation of debt by creditors. Now, typically that happens when there's been an earthquake, there's been a tsunami, there's been a major climatic event, and also if a country has taken significant steps perhaps to implement some supply-side or fiscal reforms. So forgiveness is cancellation. Restructuring is not cancellation. It's where you renegotiate your debt, your terms of your debts. You might extend the maturity of the debt, give yourself longer to pay. You might be able to negotiate a cut in the interest rate, or perhaps reduce the principal amount owed, the amount of debt you have. Debt rescheduling is basically changing the schedule of debt payments. So, for example, maybe lengthening the length of time in between each payment to try to reduce the risk of default. And equity swaps, less common, involves exchanging a country's external debt for equity in local companies or infrastructure projects. So, for example, it could be the building of a railway network or whatever, or telecoms, etc., or water systems. That can reduce a country's external debt burden and, in theory, of course, can have a consequential effect on long and aggregate supply. So do please take a moment, if you're watching this for revision, to maybe take a screenshot or press the pause button if you want to take some notes. Debt relief comes in different formats. Make sure the examiner, if needed, is aware of that. There's also something called the debt jubilee. You may have come across this. It comes from the biblical practice of a year of rest and the forgiveness of debts that was held more or less every 50 years. And in modern times, the debt jubilee campaign has been proposed as a solution to the problem of unsustainable debt, particularly in the world's poorest nations. The basic idea is that you would have a jubilee, you'd have a year where a lot of debts are forgiven. So the economy can essentially, the debtor nation can reset and start over again. Just be aware of the concept of a debt jubilee. Okay, here's the moment where you might just want to press the pause button on your video and have a go at this question. Give me 3 arguments in favour of debt relief for poor nations. So have a think about that. How would you justify debt relief for poor nations? And if you can, jot down some ideas. When you're ready, I'll just press play again and I'll take you through some answers. So give me 3 arguments in favour of debt relief for poor nations. Here are the points I came up with. First of all, it is seen as a measure, an intervention designed to alleviate and reduce extreme poverty because it frees up funds for a government. Obviously, if you don't have to pay as much interest on a loan, if the debt itself is forgiven, the government, in theory, then has more money, more resources that can be used for things like healthcare, better sanitation, education, and other key social services. The second point is that debt might stimulate growth because if the country has a lower external debt burden, again, they will have more money, perhaps to invest in capital, including infrastructure, which might stimulate long-term growth without necessarily being burdened by hefty debt interest repayments. And there's a third point about the humanitarian or the social aspect, the fairness aspect, the social justice justification, if you like, that debt relief can provide humanitarian relief, especially countries that are really afflicted by civil war, internal and external conflict, natural disasters, which can further exacerbate, they can worsen. The word exacerbate means worsen that already fragile economic situations. Think about potential debt relief for Ukraine, for example, after the war when Russia has finished. What about 3 arguments against debt relief? If you get this question as an evaluation essay or question, can you again press the pause button and maybe just give yourself a minute or so to think about arguments against debt relief for poor nations? So what do we think? Well, there's so many arguments here that you can come across. Let me maybe highlight 3. I'm sure you've got even better ones than these, but here we go. The first one is a great one, actually, great point, and it brings in a key concept. And that concept is moral hazard. So debt relief, including debt cancellation, may create a moral hazard by essentially encouraging, incentivizing countries to accumulate debt knowing that they'll eventually be forgiven. So it might encourage irresponsible borrowing, some vanity projects, that kind of stuff, excessive government borrowing and debt, knowing that there may be some relief further down the road. That's called moral hazard. The second point is that if you offer debt relief, it might have a negative impact on the country's credit rating. So once you've experienced debt relief, maybe an IMF adjustment program, it might be harder and more expensive to secure loans in the future because future creditors will know that there's been some debt cancellation or debt default along the way. And there's also a kind of fairness aspect that if you offer debt relief to one country or one region, it might be seen as unfair or inequitable, particularly for countries, lower middle-income countries, that have responsibly managed their own government finances and didn't necessarily have to receive debt relief. So there's a kind of fairness issue there, there's a moral hazard issue there, and there's a credit rating issue to think about. Well, in evaluation, I think it's critical to assess whether different forms of debt relief will over time actually encourage growth. So if you get a question on debt relief, does it lead to stronger economic growth going forward with consequential effects for per capita incomes and also for tax revenues? Because if debt relief does work and drives faster growth, then that will drive tax revenues up, per capita incomes up, and allow a country perhaps more easily to service debts in the future. The big question, I think, is whether debt relief meets your development goals. Will debt relief, for example, in the aftermath of the pandemic, feed through to better human development outcomes and reduce extreme poverty? The UNDP, the United Nations Development Programme, argue that the pandemic has had a significant negative effect on human development progress. They're arguing the fact that the progress in improving HDI outcomes, the 10 years of progress has essentially been reversed in just 2 years, 2020 and 2021, because of the impact of the pandemic. So perhaps in the wake of that, in the aftermath of that, there is a stronger case for some form of debt relief for those countries worst affected by the pandemic. I'll leave that question in the air. That's maybe something for you to think about. Either way, thanks for joining in this revision blast on debt relief. It's one of those really quite key concepts in development economics. The challenging issue: should rich nations, or even creditors in middle income nations such as China, should they be prepared to write off or restructure some of the debt of the world's poorest nations? I will leave that with you. Thanks for joining in. If you found it useful, please press like. We really appreciate it. Maybe subscribe to the channel. But most of all, stay happy, stay positive, stay curious, and see you soon.